Hey, everybody. Welcome to Earnings Call. My name is Jeffrey Beemer. I'm the Senior Investment Strategist over at ewotrader.com. And if you are familiar with what we do here on this show, we look for stocks that are declaring earnings and specifically on how to make money on those stocks. We do it each and every week. We review trades, we review charts, and at the end, I talk about last week's trade and I give you a new trade for the week. So sit back and relax because we are here on the week of July 28th, 2025. This is a big week, probably the biggest week of this earnings cycle, because not only do we have over 800 companies declaring earnings this week, but we have over 160 companies that are on the S&P 500 declaring earnings and some big names on the NASDAQ. So in addition to all that, we have a Fed announcement on Wednesday. This could be a volatile or a very quiet week as we get into the week this week. So I'll go through that list and we'll look at all those charts and sit back, relax. Here we go. Because we look at a lot of stocks, don't forget to use the chapter feature at the bottom of this video to jump ahead if you want to look at a particular stock on our list. But here is our list for this week. These are sorted by the days and who's going to be most volatile and who's going to be least volatile. And it's not our opinion. It is what the stocks do historically and what the option market makers are pricing into the options on the stock. Okay, so on the left-hand side, we have the big breakout stocks, which we'll talk about in a minute. But first, we're going to talk about the quiet stocks. So here's the list of quiet stocks for this week, and you're going to recognize the names here. Everybody from Waste Management, okay, to Visa, Boeing, Microsoft, Meta, Apple, Amazon, Mastercard, Exxon Mobil, and Chevron, just to name a few. But these are going to be the quiet stocks. What does a quiet stock look like? Well, let me show you an example here real quick. We have Pfizer, which actually has earnings next week on Tuesday, August 5th. Believe it is before market open, but we'll double check next week on our show. But it isn't. Their earnings are next week on Tuesday. But this is an example of a quiet stock. It doesn't move very much, not only during the average day, but even through the earnings announcement. So for these stocks, we like to do strategies, option strategies like Iron Condors, butterflies, but specifically Iron Condors, we do the most to capture premium as the stock goes through earnings. We get that single digit move from the stock, and then we capture that premium that we sold in the Iron Condor. All right. So let's jump to our list here, and you're going to see we're going to start off with Nucor here. They do declare today after market close. The average move for the stock is 4%, and that's about what the market makers are pricing in right now. And interestingly enough, you can see that this is, again, the stock has rallied nicely since July 1st, really. Okay, going from a low of 110 up to 145. But we're not concerned with what it's done this month, which has actually been pretty impressive. We're just worried about what the earnings are going to be. Okay, and we're not really worried because we're looking at what the option market makers are pricing in, and they are the smartest traders on the street. Okay, and also what the historic movement of the stock again is, and we expect less than a 4% move between now and tomorrow morning when the stock declares earnings after market close today. Okay, another featured stock here this week is Waste Management. You know, as you can see, this is a $200 stock. And they do declare today after market close. The average move here is less than 6%. Okay. And you can see that, Waste Management, it just pretty much trades in a range. It, is a little bit volatile, but, how do companies or how do investors make money on this stock? Well, this is one way. We would look to sell an Iron Condor on this. Over 6% out of the money, okay, because the market makers are expecting about a 6% move. So we would want to do it at 8 or 10% out of the money. And that's what we would look at doing, okay? And I'll show you an example of that here in just a little bit. Okay, now Boeing was in the news this morning, okay, and they declare tomorrow before market open. So in the morning, first thing, Boeing has an average move of 7%. And the stock has been on a little bit of a move. Now, this is one thing to check through the earnings announcement, not only current trends, but is the sector or is the stock really in the news a lot? There may be a little bit more volatility on Boeing with some of the news that's coming out. So before you just blindly put on a trade on Boeing to capture that sideways movement, just double check and see what that news is. And yes, anything below 10% we consider a sideways move. Okay, because it's really those double-digit movers that get our attention. All right, so let's keep going through the list. We have both Visa and Mastercard this week. We're going to start with Visa here. They do declare tomorrow on the 29th aftermarket close, and the expected move here is less than 4%. Why? Because this is a mature company. It just really doesn't move very much through its earnings. The earnings itself take a lot of new, fresh information to drive the stock higher or lower. And you can see that through the earnings announcements, they just really don't move. You can see the last earnings announcement, we had this big green candle the day after, but effectively that was just a couple of percentage points, not even really a big deal at all. So a short-term Iron Condor would have been great on Visa. And being a $300 stock, the premium is really built into these options, and there is lots of choices within the options chain to do your trade. Okay, now Meta is going to declare on Wednesday, and they will declare aftermarket close. The average move here is about 7%. So the days Meta used to be on our breakout list many years ago. Okay, but lately, over the past 8 earnings cycles, meaning 2 years, this stock has really quieted down. Okay, and as you can see here on the last earnings announcement back here in April, the stock did gap higher, but that was a move of, I believe, only about 4% on Meta. Again, they're at $716 right now. So that might look like a big move, but in the reality, it was only about 4%, and that is what we are expecting again from Meta. Tomorrow, after market close, a move less than 7%. Okay, now also declaring tomorrow will be Microsoft. Microsoft has been in a beautiful upward trend. This is reflective of regular buying from institutions, programmed buying, computers essentially acquiring the stock and just moderately pushing it higher, and just look at that nice little upward trend. However, through the earnings announcement, market makers are pricing in a move of about 6%, which matches the historic movement of the stock. So again, we're looking at a pretty quiet move for Microsoft, even though I think with some of the new news coming out, the new news cycle, we could see volatility coming back into some of these names here in the upcoming future because of the impact of tariffs and the benefit that will have on American companies. Okay, and we'll see. All right. So Apple is up next here. Apple will declare on Thursday after market close, and again, a stock that used to be really volatile through earnings just isn't anymore. Okay, and again, we're speaking just from a volatility standpoint, and again, less than 4%. All right. So being a $200 stock, there's plenty of options above and below the current strike where you can place your Iron Condor and benefit from the drop. The one consistent thing with all of these stocks is that implied volatility rises on every stock right before earnings, and that makes the options more expensive and prices in with that earnings announcement. Okay, and by selling that expensive premium, we can then benefit from a quiet movement in the stock. IV collapses, and that is what makes the option prices cheaper. So we sell high, buy low, and that's how we make money on these stocks. Now let's talk about Amazon. Amazon's in the news constantly. Okay, they declare Thursday after market close. That is July 31st. The expected move here is less than 7%, and this is pretty consistent with Amazon these days. Sometimes we get a little bit of a surprise, but right now we're expecting, and the market makers are expecting, that single-digit move for Amazon as we head into earnings this week. Now, Mastercard, just like Visa, is a notable quiet stock through the earnings announcement. And let me see if I have my nope, my my little box went away, but I can tell you they declare on Thursday as well before market open for Mastercard. Thursday before market open, and they move 4%. The anticipated move for Mastercard is 4%, and we will expect that from Mastercard this week. So closing out our list, then we're moving to Friday, and we have the big oil companies, Exxon Mobil and Chevron. So we'll start with Exxon Mobil here, and again, $100 stock. We're expecting just, believe it or not, less than a 3% move through the earnings announcement. It is other news that drives the price higher or lower for this stock, but the earnings, analysts price in, they're pretty good with these, older, more mature companies. There's seldom a surprise. Sometimes there is, but again, market makers are pricing in a move of about 3% for ExxonMobil. And again, that is Friday morning before market open. Chevron also declares Friday morning before market open, and they have an expected move of less than 5%. Okay. So again, another good potential trade on just some of these big name stocks that you might think are volatile when they're really not, because they are much more mature now. They're mature companies on the kind of the back end of their corporate cycle, and it really takes a lot for them to move big through the earnings announcement. Okay. But some of the other names that we're going to talk about here as we go through our list are the breakout stocks. Okay. And these stocks are the ones that really get people's attention. All right. They are exciting to watch. They're like, oh, wow, what did they do? Okay. And you can see our list here. We have some familiar names and not so familiar names on this list. So let's go ahead and jump to the chart and go through these. And we're going to start with Excelsis, Excelsis, that declares today after market close. And the average move here is 15%. Okay. And market makers are pricing in right now a move right around there. They're pricing in a double-digit move for this stock. I like this pattern going into earnings, this sideways pattern here. Now, this is a $45 stock, and you can see that this stock hops around a little bit. The last earnings announcement on this stock, that was a big move right there, okay? Jumping from about $36 and closed the day at 44, okay? Big move here. And then even between earnings, this stock can jump around pretty big. All right, so we like this stock for a straddle or strangle. In fact, all these stocks that we're going to talk about on our potential breakout stocks are just that. Now, we have a bunch of names to get through, so let me continue through the list. We'll talk about Rambus here. Rambus was one of those stocks that used to be extremely volatile, then kind of matured, got quiet, and then it got volatile again, which stocks can do. And we're looking at moves over about 8 earnings cycle, so 2 years worth of data to see if there's consistency in these. And so the move here is about 11% for Rambus. So we are expecting a double-digit move here, over $6, probably $6 or $7 on the stock after the earnings announcement, because this is a $63 stock. So we're going to probably see anywhere between a $6 and $8 move for the stock if the stock meets its historical kind of performance averages. Okay. And that's what the market makers are pricing into this right now. And speaking of which, talking about another mature company is UPS. Now, they tend to be more volatile just because of the sector they're in and the industry they're in, because not only are they affected by commodity prices like fuel prices, but they're also impacted by the consumer and what the current business cycle is and how many people are sending packages and the time of year. Okay, so UPS will declare tomorrow, Tuesday, July 29th, before market open. And they have an average move of 12%, and market makers are pricing in about that move right now of 12% for UPS. So we could see a move higher tomorrow of $12, $13, either higher or lower. I don't know which way it's going to go. So that's why we like to do a straddle or strangle. And remember, those two strategies don't require margin. It's just buying call, buying put. Straddle does it at the same strike price. A strangle does it at different strike prices, like a higher call, lower strike put. Okay, so that is how we decide which one to trade, a straddle or strangle, through a process of looking at the break evens and time to expiration, those sort of things. So we have a publication that we dedicate to this called Delta Neutral Breakout, where I put out alerts on these types of stocks each and every week. In fact, I put out an alert on Excelsis just this morning. So, and I follow up with commentary and exit strategies and all that sort of stuff. So be sure to go to ewotrader.com and look that up if you are interested. So another potentially volatile stock for this week is Teradyne. They will declare Tuesday the 29th after market close, and we're looking at almost a 15% move here. The average move of the stock is about 14%, and market makers are pricing in about a 15% move as of the time of this show. So big potential move for Teradyne, and you can see historically that they tend to move around either before or after the earnings announcement. And, we'll talk about that. So, here's a nice little drop, and we just go back and look at price. And sometimes on these volatile stocks, it's pretty clear where the earnings announcements are. All right. Now, a personal favorite of mine is Carvana. All right. Carvana remains a consistent big mover through their earnings announcement. They will declare on Wednesday, July 30th, after market close. The average move here is greater than 15%. Okay. That is what is being priced into the options right now. And that is the average move of the stock, greater than 15%. We just have a couple of more here before we get to our trades. All right. So Vertiv Holdings will declare on Wednesday, July 30th, before market open. And the expected move here is greater than 12%. Now, with a stock that has a chart that looks like this, you can expect some volatility. Now, normally, I like consolidation patterns, but I've been seeing a trend here with stocks that are either going much higher or much lower, where there is some good volatility in those. Okay, and I would expect that from Vertiv as well. So look for that Wednesday morning, a bigger mover, greater than 12%. On the earnings announcement. So you're looking at a move of $16 to $20 maybe on the stock, and either up or down. Don't know which way. And that's why we trade a straddle or strangle. Okay. Now a meme stock here, Roblox, they announce on Thursday, July 31st, before market open, they have an average move of 15%. Okay. Now, with a lot of these stocks, it's important to keep in mind that there are some cycles during that average or during that period where the stock just doesn't move very much. Okay. And so, usually with these, we're going to be 7-1, 6-2, more winners than losers. But the average, there's some that are 8-0 on the past 2 years. Okay. They just remain pretty darn volatile. And we have consistent winning trades on those. Okay. But not every single cycle meets the criteria. Sometimes the option market makers get it wrong, or the analysts get it wrong. One of the two parties gets it wrong, and the stock either moves more or less than what the anticipated expected move is of the options. Okay. All right. So the last stock that we're going to cover here is Riot. Riot Platforms, a nice little trend higher. They will declare Thursday after market close, and they have an average move of 13% through earnings. Okay, so watch out for Riot. This stock did have a quiet cycle the last earnings period. That's why I think maybe we'll get that move. Now, this is a really inexpensive stock. This is at $14. So it's important to really look at the option prices, because you may see, oh, the call is worth $1 and the put is worth $1.20. or something like that, and you're thinking, oh, that's cheap. Well, that's actually 10% of the stock on each side. Well, almost 10%. Okay, on each side, and if the stock is moving 13%, and your options are $1.40 and $1.40 for $1.40 for the call and $1.40 for the put, you're going to have to get a 20% move for the stock. So watch out for that. For a stock like this, I would hope the options are below $1, and that's sometimes hard to come by on an inexpensive stock like this, where it's about $14. So, all right, that's our list for this week. And if you like what you're seeing here, as we talk about these stocks each and every week, if you trade options, this is the show for you, because a lot of people don't know how to trade options through these earnings cycles, and that's what we talk about. And it's important to make sure that you're trading the right way through these earnings names, okay, through these earnings cycles, okay? So as we go through our list each and every week, I do give out trades on a regular basis, okay? So when we look at this list, I'm highlighting the best or the biggest names, the best opportunities or the biggest names that people are familiar with on here, okay? And that is how we pick stocks that we're going to work with each and every week, okay? So last week, we did a trade on Enphase, all right? We did a strangle on Enphase, all right? And again, this is where you buy a higher strike call and a lower strike put. All right. No selling of options until we exit the trade. We buy to open and sell, and buy to open for the call, and buy to open for the put. Okay. And what we're looking for is that stock to move greater than the break evens in the trade. Okay. So you can see that Enphase does gap around, not only through earnings, but through non-earnings events as well. So how are we doing on the trade, or how did we do on the trade? Well, let's take a look. We are currently down. Now, this is still an open trade. All right. We still have 11 days from today, the 28th of July. We still have 11 days available to us. And you can see that the stock gap down is trading just below, or excuse me, just above the lower break even of our trade. So we currently have a loss of about $141. The good news here is the trend, as you can see on Enphase, is down. So we are sticking with the trend. If there's any premium left in the calls, you could sell those to close, keep hold of the puts. And what we're looking for is a continued flow downward for this stock as it has a declining value. And we still have over 10 days till expiration. So this is a hold. So next Monday, I will update you on how this trade is performing. If it is a trade that you took as you watched this show and you're in it, we're going to stick with it. If it then showing a profit, that's the time to exit the trade. Okay. Otherwise, we will be exiting next week sometime, and if not earlier, if the stock does drop below that lower break even of the trade, which looks to be about $34 and change, and the stock was trading at $35.21. So we need it to drop just a little bit more to show a profit in the trade. Okay, so I do have a new trade for you this week, and as you might expect, with all the big names that are declaring earnings this week, we are going to do one that actually wasn't on our list this week. Okay. But it is still a well-known stock nonetheless. And it still offers a great opportunity. So we are looking this week at doing an Iron Condor on a stock that does move a little bit, but the option premium is so big that we are going to do an Iron Condor on Reddit. Okay. So if we take a look at that trade on Reddit, we can see a big potential mover, and the we have our break evens well above the stock. The stock can actually move double digits, and we still will be okay. Okay, if the stock moves up 9 or 10%, we're good. If the stock moves lower 9 or 10%, that's okay. We are still within the break evens of the trade. and the options here expire this Friday. So I'll give you that that we're looking at Friday expiration for this. That's Friday, August 1st, I believe. My goodness. We're looking at using very short-term options, selling that expensive implied volatility. So Reddit has earnings on Thursday after market close. And so the good news is we're only in it till Thursday, and then Friday options expire. So it's going to be a wham bam, thank you, man. And we're looking for a nice little profit here. Looking at a return of about 33% on risk on this trade. Okay, 33% on risk in just 4 days. So that is the power of these Iron Condors when we're right on those particular trades. All right, so that is our show this week. Listen, knowledge is your best asset. So keep learning, keep trading. And I do this each and every week. I got a free gift for you. The link appears on the screen. Be sure and download it if you haven't already. And go to our website, ewotrader.com, and you can get more information on our subscription services that we offer. And I look forward to seeing you right here again next Monday for another big week of earnings. Everyone have a great trading week. I'll talk to you again soon.